back, everyone, to Currency Midweek for June 22nd, 2022. Welcome to Maverick Currencies. Corey here with you. As always, just starting with a reminder to make sure that you follow your trading plan, and let's get to it. So, in terms of the market in FX land, right now it's a lot of discussion about the Swiss franc, and we'll spend some time on the Swiss franc today. Markets, obviously, in general, are in a sustained downtrend. We're seeing a little bit of bounce back this week. We just crossed, so this is something to be aware of as currency traders. You kind of have a peak of volatility a lot of times around the third Friday of the month. And that's because of expiration of options and futures and all these things. And this past expiration, this past weekend, was what we call a quadruple witching, which means there were four major markets that all led up to their expiration. And we're talking about options that control, tens or hundreds of billions of dollars worth of capital and so on that have to be hedged. And so it's kind of this crescendo, so to speak, this kind of peak of volatility. And it will impact the FX markets as well to a certain extent. We've seen the Fed pushing back on inflation and kind of saying, okay, this is our number one goal, this is our focus, and it has to be. Look, Fed Chair Powell is speaking before Congress, and basically, what's his tone going to be? Well, it has to be that inflation is our biggest worry. We're going to do everything we can to bring it down and so on, because the public's up in arms. Politicians are going to push back on the Fed and say, do your job. And of course, he's going to push back and say, you need to do your job. And they're all culpable to a certain extent for this inflation that we're seeing. So, the tone is not a major surprise. He has to come out with just that being the number one talking point. Interestingly enough, we're starting to see some of the drivers of inflation calm. Now, I know that's not going to be the headline out there that you're going to read about most of the time, but we are in fact seeing, supply constraints kind of slowing. We're seeing oil coming down. We're seeing PPI, core CPI, core PCE. They all made lower highs. So the headline inflation number was kind of scary, but we are in fact probably at the peak in terms of the inflation numbers. But the problem, like I've been saying for weeks, is that doesn't mean it comes down in significant fashion. And even if it backs up to 7, 6, 5%, that's just still way too high. So it's going to be this ongoing battle, and the Fed is going to be raising rates for the foreseeable future, and the markets are going to struggle. They're going to have to fight through that a little bit. It's going to be choppy, and there's going to be ups and downs and sideways, and it's going to be a mess of things here, especially through these summer months. The US dollar broke out to new highs but has since pulled back. The Swiss franc, with a surprise rate hike and asset selling program, they actually had been buyers of stocks and other assets, and they went in aggressively selling mode, and that really fueled the Swiss franc to the upside. Markets were not expecting them to be that aggressively hawkish, and obviously those things tend to be good for your currency, and so the Swiss franc is kind of surging back on that. Now, energy, we talked about the past couple of weeks. I'm a seller of energy. I mentioned this, we talked about it last week. We talked about it the week before, that it had kind of its classic exhaustion high signal. There was so much, excitement and anticipation, and the general public kind of saying, hey, energy, oil's going to go exploding, and kind of finally piling into that energy market. And usually those are big signs that a big, sharp and steep correction is going to happen, and it did. I mean, we have seen energy come off dramatically. Now, these are what we call shakeouts, where the way I kind of picture this in my mind and kind of think it through is, look, the trend in energy was very good, but the general public wasn't like aggressively long and buying energy all year or something. It's kind of like they're usually the Johnny come latelys, and they finally got involved in the last few weeks, and that's why we wanted to get uninvolved basically on the upside of that anymore. Now that it's come off pretty substantially and kind of shaken some people up and shaken some people out, it's probably going to go a little bit lower, but you can start to look to be a buyer back again. I mean, I think the punishment has been inflicted. The public says I can't win at the gas pump and I can't win by buying these things because now they're collapsing on me, and they're probably bailing almost as quick as they got in. And so those shakeouts are kind of what you need. You shake the tree, you shake out the weak hands, and then it will probably stage a recovery later this year. Crypto markets are quite interesting. I mentioned last week, I'm a believer that we're kind of in that exhaustion phase for crypto. That crypto, hopefully it's only Steven. Can everyone else hear me? Steven lost sound, and I hope that's only him. Can anyone else chime in here and just make sure we've got sound? Just making sure we're good, so thank you very much. So, yeah, I mean, in terms of crypto, I think we're kind of at that exhaustion low. Here's the problem. And you saw it over the weekend. If you were watching crypto, and I'm kind of kicking myself because I had traded crypto. Um, I mean, knock on wood, I've done such, I don't think I've ever traded a market better than crypto. I'm not sure I've ever lost money in crypto. I've just, for whatever reason, that type of, there's just such a psychology involved in that trade and those trends that it's been pretty easy. And I was gonna buy this weekend, and I've had some health issues, and I'm not gonna go through all of that. But anyway, I basically was laid up this whole weekend, and even as I was laid up, I saw it um, down there at around 18,000 in Bitcoin, and I wanted to buy, and I was so sick, I literally said, I just don't have the energy. I can't watch it. I can't trade it. I can't and when you're out of it, you just kind of, I mean, you shouldn't be trading. So I knew that, you know, I may not be thinking clearly, whatever. I just kind of said, well, forget about it. But that was kind of my game plan, was to use those plunges to buy. Well, it would have been an incredible, quick uh, reversal there that would have done pretty well. But anyway, make a long story short, in the crypto markets, I think we've hit that kind of exhaustion low. Now the problem is that usually when you hit that stage 4 exhaustion, what happens next? You kind of go back to stage 1 consolidation. So really choppy, probably builds a base, but then I would expect another leg higher. I mean, if I think we trade probably between 18,000 to 22,000 in Bitcoin for a little while, something like that range. And then we see a leg up, in a month or so to 25,000 or something. And everybody kind of says, okay, we're recovering. That's kind of how I would envision this going, is that it'll be range bound and then probably have one more leg to the upside. And then we'll see from there. But I'm feeling better. I'll be back to looking at opportunities in that crypto market. Now, economic reports. CAD, retail sales beat expectations, 1.3 versus zero point 0.5. If we skip down, CAD CPI month over month, higher than expected, which is not necessarily a good thing, right? We don't want to see sky high inflation. But if you look at the UK met expectations for their annual inflation, but wow, 9.1% as expected. So these inflation numbers still running hot, and it's not just in the US, of course. This is globally. Those numbers are high everywhere. So as we look at various markets, kind of a mixed bag. Crypto down a little bit, S&P up some, oil down like we talked about. There's not too much going on here, that's really kind of wow, shocking or needs a point of emphasis. It's just kind of a mixed picture. But crypto has kind of, I think, that exhaustion low that we talked about last week, that you can, I don't know, first time in ages that you could actually try to buy some of these big sell-offs for just that kind of spike back recovery. But anyhow, let's take a look at a few charts. So the S&P chart, if we analyze this similarly, you kind of have these big exhaustion kind of volume days. You had a really extended trend and really extended range to the downside. So the S&P is kind of at a little bit of an exhaustion, but again, probably choppy before we make any real headway to the upside. I am going to lump equities and crypto somewhat together, and they do have somewhat of a positive correlation. The reversal in crypto over the weekend kind of told me, okay, this market can bounce and will bounce to start the week. If crypto had come in just a complete disaster, meltdown, and uh, been opening for trading at, on Monday at 15,000 in Bitcoin or something, the equity markets were going to probably be down big. It's a psychological thing, but there's also a factor there of, look, the crypto markets now is $1 trillion market, and there's real companies with real capital at risk and banks that have made loans and all sorts of things. So there is some market risk. It's not that it's, is it a global financial crisis if crypto melts down? No, but it will have some, residual effects. It will send some ripples through the market. I think that's fair to say. As we look at the US dollar, I continue to talk about this really long-term breakout above 104, and we've kind of sunk back in here. That's okay. I still kind of look at this as, well, you're taking out these old highs. You're probably going to work your way higher, but it doesn't just go in a straight line. This is a very, very long-term chart. You can kind of chop around here for a while and still be in the breakout mode. I don't really see anything that stands out as far as, taking an action today necessarily. As we look at the price action, Japan, the Japanese bond market, um, the JGBs and so on, the rates on those are really spiking pretty dramatically. And the thought is that this is going to force the Bank of Japan to do something they haven't done in such a long time, which is turn hawkish, start to stop their programs, bond buying, etc., etc. And I'm just not so sure that's the case. Right now, inflation numbers are actually not high in Japan compared to the rest of the world. They're in just such a deflationary phase of, for decades, that it still has lasting kind of residual impact. But that's the thought, is that they were going to have to kind of, maybe the bond market was going to force their hand. Well, the FX markets don't believe that, as the yen just continues to sell off. If you do think that the bond market is telling you something, the Japanese bond market with rates spiking up, remember, as that started to happen in the US dollar really started to surge. And sure enough, inflation spiked, and the Fed had to come out with guns a-blazing. So it is worth debating whether or not the Japanese bond market has it right, whether inflation is actually going to hit the shores of Japan, and whether Japan is going to have to come off of their accommodative policy. And that would be a huge change, because if there's any central bank out there that just does not raise rates, does not do any of that, I mean, it's Japan. That is country number one for easy monetary policy and dovish central banking. So, um, I don't necessarily want to be short. I can't say I can necessarily be long yet, but I really wonder if the next trade is, to the upside, and that kind of follows their bond market a little bit that way. Crypto, uh, Bitcoin, a little more stable than some of the others like Bitcoin Cash or Ethereum and so on. Um, not too much. 5% moves is actually pretty mild given what we've been seeing at 20% clips and whatnot in just a few days. So, still kind of a rough market, but huge bounce off of the lows over this weekend. Let's at least put it that way. So, let's go look at some things together here. The rest of this week, if we kind of take a look, well, I mean, our outlook overall is more negative on the market. We came in this week though +2 for the week in our stock and options division. We said, look, we're probably going to bounce in equities. So it'll be a short-term bounce, but overall things are still more bearish. That's pretty apparent. As you look at worldwide equities, same thing. We're in a downtrend. We're below, breakdown zones. You could certainly bounce up underneath that, but it's going to be a little choppy here for a while. As we look at crypto markets, we had the weekend plunge and some recovery. This doesn't fully do it justice when you kind of look at Bitcoin by itself. I mean, we surged down, I think we got to 17,800 or whatever it was exactly at the lows. I don't remember, but we definitely traded down to about 18K. And then, yesterday we're trading up closer to 21. So you're talking about on a percentage basis, 3K bounce or something like that. That's, 16 or 17 or whatever percent it is. It's a pretty good bounce off of the lows, but it's going to be like this. It's going to just, those bounces are going to be short-lived, and you got to be pretty quick to take off those gains, I suspect, in the near term. For the rest of this week, market's going to be watching Fed Chair Powell. He also testifies tomorrow as well. You get some German manufacturing and service PMIs. Nothing really on the docket that's going to be a big mover. The rest of this week, I suppose the one thing that can kind of move the markets would be Fed Chair Powell and what he might say. So if anyone has anything they want to look at specifically, fire off an idea and let me pull up some charts here. Let's come over and take a look at a few things, and let's load a chart layout, and we'll come into some trend and velocity and whatnot, and kind of take a look at some things together. So one of the ones that has really traded poorly is the Kiwi. Just continues to kind of be a more negative chart, a more bearish chart overall. I think you can continue to look at this for potential trades. You're probably getting a little bounce here, but should fade off and ultimately break down would be the anticipation. Kiwi looks really bad. One of the more bearish charts out there. Japanese yen looks pretty darn rough. I'm just not so sure I want to continue to press this one. For the short term, it probably does make another leg to the downside. This is probably going to pierce that, but just with some caution. I guess, I would be short here. Let's say if I have to buy or short, well, I'm going to short it. But I'm going to short it and take quick profits, and I'm not going to kind of play this where I think hey, the yen's gonna, have the next couple of weeks of downside or anything like that. I suspect that the yen's probably in somewhat of its another exhaustion kind of phase to the downside, that we might see a plunge. And sometimes the the final phase of an exhaustion, like this thing could really deteriorate, which would be kind of the finishing touch on it. So you can play it for this final stage to the downside, but I suspect, I don't know, the Japanese bond market's thrown me for a little bit of a loop where I have to give that some credit. These currency markets have followed those bonds, and as yields have spiked across various countries, you've seen their central banks scramble, and you've seen their currency spike as well. The yen's not doing it yet, but I just tend to think it will. So there should be, um, in the upcoming near future, a pretty violent rally in the Japanese yen. It's just hard to know where it's going to happen and when. We just have to trust our eyes, kind of trust that we'll know it and when we see it, I guess. But something to be aware of. And then Swiss franc, I mean, this was game changer. This was a change in trend and momentum and whatever else. And we talk about this from time to time. There's things that are known and there's things that are unknown. And there's all sorts of combinations. You can have known unknowns, you can have known knowns, you can have unknown unknowns, et cetera, et cetera. Well, this one I would call a known with a huge unknown. We knew that the Swiss bank was, coming out and yada, yada, yada. But nobody, and I mean nobody, expected them to come out guns a-blazing with, you know, massive changes to policy. I mean, huge, wide sweeping aggressiveness. It was not, you know, something that was really laid out to the public. And you can see the reaction was gigantic, and no surprise there's follow through. That's one of those where you put a big star by this and you say, when nobody's expecting it, that's the thing about unknowns is we call them unknown unknowns when you have something that's not even scheduled and planned for and it comes out of nowhere, and then you have all the unknown questions. When Russia first moved on Ukraine, that's when the stock market really started to break down. It wasn't once Russia invaded. It was like when it first moved to the borders and got ready, the markets went, that's an unknown unknown. We didn't know that was coming on this date and time. And now we've got all the questions of, well, what's about to happen? Are we entering World War III? Yada, yada, yada. And so they just get massive repricings. And that's what the Swiss franc is going through, is everybody saying, well, what does the Swiss franc need to trade at now that there's all of this coming, this aggressive hawkishness that was not priced into the currency? Where does that put it versus this and this and this and this and this? And so it's undergoing that massive repricing as we speak. You have to be a little bit careful because it'll stay volatile here for a while, and there will be pullbacks. But um, you know, when you get reactions like that, you can't help but look for some buying opportunities and to ride that wave. So, pretty interesting dynamic there. Let's look at Bitcoin itself, and if you just look at this in terms of kind of the price action and momentum and whatnot, as we came into the weekend, you can kind of see it plunging here. And then I guess about as bad as it got, well, it got even lower than I was 17. What did I say? 17.6. Well, I guess that's about right. 17.5, 17.4, something like that was about the low there in I guess it says 17,592 was the actual low. So anyway, 17,600 basically was about as bad as it got. And then the very next trading session, we're back up to 20,000. And like I said, yesterday we were up at, 21, almost 22,000. So it's seen a nice bounce back. But is it going to go screaming to the upside? Probably not. You're going to get some drops here and then it'll probably rally back. And this 20,000 level is going to be like a tug of war. And it's an important level for some other reasons. You have to think about the miners. There's still Bitcoin being mined, and they have break evens like anyone else. And if it costs them, $18,000 to get a Bitcoin, are they going to keep pumping a lot of money in, spending 18,000 if Bitcoin's trading at 16, at 14, at 13, at 12? So markets are panicked because they're going, nobody will mine this thing if it collapses in price because it would be very unprofitable to do so, and so I don't know, there's all these weird kind of effects. It's, other commodities go through this as well. Oil had the same thing. Part of why we have these problems in oil is because in 2020 oil prices collapsed, and these oil companies said, why are we going to keep spending $45 per barrel in expense when it's selling for 20 a barrel or zero or whatever? Why are we going to keep spending? And so some of the wells were really expensive. It cost $60 to pull it out of the ground. They shut those down. They said, well, we're not going to keep these open and keep losing money. Gold miners can go through the same thing. It costs them $1,200 to to mine an ounce of gold, and gold plummets to 1,000. They'll shut down the mine until the price recovers. So right now, Bitcoin could be in a weird environment where that there is support here because the market's kind of freaking out about the idea that what happens if, and if it doesn't stay above this where miners stay profitable, then all hell can break loose. And then there's also the added discussions about the breaking of Tether, and if Tether breaks and collapses and so on, then what next? And so anyway, it's a tough market, but one where I think there's going to be this big tug of war around 20,000, to answer your question. There's not much else to add in terms of kind of what I'm seeing. Let's take a look here. We had a couple of requests. So let's look at USD, Swiss franc. One of the only things that is weak versus the Swiss franc, or, I should say, one of the only things that's stronger than the US dollar for the last little while would be the Swiss franc. Now, the US dollar's pulled back the last couple of days, but Swiss franc had a gigantic move. So we are kind of down here near that support level on it. You could look at this. I mean, this could be kind of an inverse cup and handle. Maybe you get a little bounce here before the next plunge, something to that effect. But I see no reason. If you're looking at Swiss franc pairings, I don't know, against the US dollar's my favorite, but I mean, almost anything is going to be down versus the Swiss franc. See the euro down versus the Swiss franc, or any other currency pairs that you pull up. Here's the CAD, which has been a pretty good currency, but not so much versus the Swiss franc. You can just see the deterioration because it's so strong. But I might go even looking at something like the Kiwi, which had already been weak. I don't, unless you feel like it's kind of already so extended, you might just pick on the weakling and look at something like Swiss franc versus, or Kiwi versus the Swiss franc for more downside. Good question. Is the CAD gonna struggle a little while energy's backing up? Yeah, I think that's a real possibility. And we saw inflation numbers kind of spiking. That can kind of help the CAD because people say, well, now the Canadian Central Bank, Bank of Canada might have to raise and be more aggressive and so on. But it's also a negative because the inflation's running hotter than expected. So you got kind of mixed picture there. I would tend to still lean towards liking the CAD versus a lot of other things. The Japanese yen for me is one that I would watch for a big reversal. If you were to see, let's just go euro against the yen or whatever. If you were to see some big reversal in the yen, where let's say, maybe it's a fake move. Maybe the euro tries to break out and then it just kind of plunges back down and leaves a long upper shadow and a red candle or something. I'm on the short camp of euro yen or anything else versus the yen. If the yen stages a big reversal in and I'm just watching for something that really stands out. I know it when I see it type of moment. If the yen stages some big reversal, then I'm going to play basically the yen to the upside and expect it to follow what's been happening in its bonds. And I think that's kind of the next big trade for me that I could see having some big follow through and really be something that I could be keyed in on for a while. So maybe it doesn't happen for a while. Maybe this breaks and it's good and it surges and then the exhaustion happens up here or something. Okay, fine. That's where I'll get long the yen. I don't really care where it happens, but I'm watching for something to tell me that the yen has made a huge reversal bullishly. That kind of what they call a capitulation moment or kind of an exhaustion moment. This big reversal of trend and patterns and momentum and all that. So good stuff. So the rest of this week, our schedule, we do have the British pound and Japanese yen discussion tomorrow, and then we'll, as always, get the currency room out. But be aware of that. That's a live class. You can get scheduled for that tomorrow. British pound and Japanese yen. Thanks everyone for being here. Have a great rest of your week, and we will see you next time. Goodbye, everyone.